Every generation has its moment of economic reckoning. Prices rise, jobs disappear, markets tumble, and people start asking the same uncomfortable question: are we heading into another recession? The word recession gets thrown around a lot, but what does it actually mean? Technically, a recession is defined as 2 consecutive quarters of negative GDP growth. But beyond the textbook definition, it's a period when the economy shrinks, businesses pull back, and everyday people feel the squeeze. The most widely recognized signals include rising unemployment, slowing consumer spending, tightening credit, and declining business investment. When several of these indicators move in the wrong direction at the same time, economists take notice. Today, several warning signs are flashing. Inflation, while easing from its peak, remains stubbornly above historical norms. Interest rates have been raised aggressively to fight it, and high borrowing costs tend to slow economic activity. Consumer confidence has dipped, credit card debt is at record highs, and corporate earnings growth has stalled in key sectors. None of these signals alone predicts a recession, but together they paint a picture that deserves serious attention. History offers some useful perspective. The 2008 financial crisis caught most people off guard, driven by a collapse in housing markets and over-leveraged financial institutions. The 2020 recession was sudden and sharp, triggered by the COVID-19 pandemic, but also unusually brief, thanks to massive government intervention. Each recession has its own cause, its own shape, and its own recovery timeline. What are economists saying now? Opinions are divided. Some analysts point to a resilient labor market and strong consumer spending as reasons for cautious optimism. Others warn that the full effects of rate hikes haven't been felt yet, and that the economy may be running on borrowed time. The honest answer is no one knows for certain. Economic forecasting is notoriously imprecise, but awareness is power. So what can you do? Build your emergency fund if you haven't already. Avoid taking on unnecessary debt, diversify your investments, and stay informed, not panicked. Recessions are a normal, if painful, part of the economic cycle. They end, recovery follows. The key is to be prepared, not paralyzed.